Okay, good evening everybody. I think we are live. So we are starting off the stream tonight in the WeWork office. Now, my computer is having some technical difficulties. I will say, for whatever reason, my computer only works when it's plugged in, so that's been really agitating today. So I needed to start off the stream in the office, in the WeWork, but I promise you we will be getting started in just a minute. So everybody, it's August 30th, 2022. It is a beautiful Tuesday night. I would like to start off the stream by saying there is a little bit of... hold on one second. I think I have to disconnect the Wi-Fi here. Let me see. Anyway, I think there's a little bit of a rumor mill here coming out on Wall Street. Snapchat is supposedly in talks of laying off about 20% of their workforce, which would account to about 1,000 employees. Not sure if that's true or not, to be totally honest, but I think that's something we need to be cognizant of tonight and tomorrow. Definitely hope that's not true. We definitely don't want to, okay? So, first thing, maybe in not this particular order, but a particular cybersecurity company that I talk about all the time on the stream called CrowdStrike did report quarterly earnings after the bell today. So under the ticker symbol CRWD, they reported earnings. They actually beat on both the top and the bottom line. So they beat on EPS, coming in at about 36 cents. On revenue of about $535 million. So we're going to talk about that earnings report. We're definitely going to break it down, but even we're going to go a little bit deeper because we're going to talk about endpoint security management, endpoints to cybersecurity. Why is it important? What is endpoint cybersecurity? What does it mean? Why should we be paying attention to it? And we're also going to be talking about the expansion of that total addressable market. We also got some major labor force data out. So the Bureau of Labor Statistics did release the job openings and labor. Economists on Wall Street were forecasting about 10.3 million job openings. Okay, so if we put that into perspective, that's about 400,000 less job openings than in June. However, they were totally wrong. You couldn't have been more wrong on that prediction because blew expectations out of the water, okay? The report came in hot. We have about 11.24 million job openings in the United States. That is now double the amount of jobs. So we're going to break down that report. We're going to go into a little bit of a deeper dive talking about quits, why workers that are quitting their jobs could be a little bit of a leading indicator for the economy. Also, we'll talk about the non-farm payrolls that are going to be coming out on Friday. Why should we be paying attention? We're going to talk about the Federal Reserve. And then lastly, we have some big housing data that just came out. So the S&P Case-Shiller Index showed a little bit of deceleration. Okay, I want to sort of tread lightly when I'm talking about weakness in the housing market. I do think we're seeing substantial cooling here, but on a year-over-year basis, we're still seeing home sales increase. So for June, for this month, we actually saw home prices increase 18% month over month from June, or year over year from June 2021, although it is a weaker pace than we saw in May. So if we remember, Last month on the live stream, home prices went up year over year in May about 19.9%. And then if we look back even a month before that, 0.6% in April. So we notice a trend here of extreme deceleration. So we'll definitely go into that on tonight's live stream. So we will get started, everybody. I just have to pack up my stuff and we should be good. Just let me put my computer away here and we'll get started. So just give us just a second. We had to start off the stream inside because my computer only works when it's plugged in for whatever reason. All right, I think we're good. Let's see. Good to see you guys. We're ready to stream. Just bear with us 1 second and we will head out of here. Cosmo, Scary, Manny, good to see you. Yeah, I had to start the stream inside because my laptop doesn't work unless it's plugged in, which is a bit of a bummer. All right, let's see if the internet holds up here in the elevator, everybody. So just give us a minute. All right, so we made it outside. So anyway, apologize for that. I've been having some crazy technical difficulties with my laptop. So for anybody who uses a ThinkPad for work, those are horrible, horrible laptops. So it only works when my computer is actually physically plugged in. So it's just been a mess today being in between meetings, but regardless, it's good to see everybody. John is here. Welcome, John. So we'll cross the street and then I will see who's in the chat. We have Dalton here. Good to see you, Dalton. Welcome. We have British Gray. Says happy Tuesday. Cosmo Scary is here. Always good to see you, Cosmo. Yeah, Cosmo says go to the Whole Foods. I actually went here today, Cosmo, for lunch, and crazy prices. Let's just say that. I see British Gray, Austin, City Limits says hey Tom and everybody. Connor says hi, how are you doing tonight? I am doing well. Dan Zhang, welcome everybody. So I was working from 28th Street today. I thought I was gonna have to work further uptown, but I actually had one of my meetings be canceled, which was actually kind of nice. But right now we are walking uptown and you can see the beautiful One Vanderbilt building, one of my favorite buildings in the city. Star Fox is here. Susanna Herbert says goodnight, Tom, from Albany, New York. Good to see all of our friends from Albany. Big Talk says, Tom, were you the last one in the office? There was a couple people there, So WeWorks is an interesting sort of setup, right? It's multiple different companies in one specific office building. So it's nice. It's a good networking opportunity to meet different startup founders and things like that. So I think it's pretty cool. Vonda, good to see you. Says, yeah, Whole Foods is ridiculous. So I got some food at the hot bar there, and it was just such an egregious price that I almost didn't pay for it and just was going to just return the food, but I paid for it and ate it. But it was $22, I think, for a little bit over a pound, which is crazy talk. Eyeglass Lady says the low-end groceries are more expensive than the higher-end ones where I am. Wow, go figure. That is almost unbelievable, Eyeglass Lady. Charlie says, hey Tom, try a software update and see if that resolves the issue. I may do that. I was going through some troubleshooting settings that I found out on Reddit from Lenovo. But funny enough, I had the same exact problem on my last ThinkPad, and they actually had to send me out another one, but we'll figure it out. Hey, EBITDA here. Good to see you, EBITDA. Hope you're well. EBITDA, did you hear about the potential 20% layoff at Snapchat? So, again, I don't know if this is confirmed, but there was a lot of talk and a lot of conversation on Twitter today that Snapchat is potentially going to lay off 20% of their entire workforce. That is about 1,000 employees. Did anybody hear that? So here's the good and the bad news. Now, if you remember from, I would say 3 or 4 streams ago, we actually covered a particular Wall Street Journal article where they interviewed 3 people, right? And I know this is a very small anecdotal data set, but they interviewed 3 people that just recently, unfortunately, lost their jobs, okay? Now, the main theme out of that article was, even though these particular individuals unfortunately lost their jobs, within 2 months, they were back in the workforce, they were employed, and they were actually making more money than they were at their previous job, which is very, very good news. And I think this goes along with everything that we've been talking about on the stream and what the Federal Reserve has been saying. Even though that we're seeing layoffs almost from every one of the big tech companies, the amount of jobs that are open in the United States is almost twice that of the amount of people actually looking for work. And we even got more clarity on that. So this is Take 31, by the way. I'll just quickly show you guys. This is Her Name is Han and Take 31, 2 of my favorite Korean restaurants in the city. But we got more clarity today in relation to those jobs numbers because the Bureau of Labor Statistics released the Job Openings and Labor Turnover Survey. Obviously, economists on Wall Street were way off with their predictions. I believe consensus was for about 10.3 million job openings. That would equate to around 400,000 less job openings than June. However, it turned out to be the complete opposite. We got an absolutely gangbusters, blistering report. There's about 11 million, I would say 11,200,000 jobs that are now open and available in the United States. But get this, if we think about the total talent pool of people actually looking for work, it's just under 6 million people. So based upon that logic, there's almost 2 job openings for every American that's looking for work. And this is putting extreme upward pressure on inflation in regard to wage gains, okay? And we talk about this a lot because let's say if you're a big company and you're trying to recruit employees, well, if you're recruiting from a smaller and smaller talent pool, well, who has the bargaining power there, right? It's the employees. So I think this trend is maybe just at its end. I know I've been saying that for a while now, but I think this trend is coming to an end. We may have until about December before we see any sort of notable action in the numbers, but I think this is very late cycle. But what do you guys think? What do you guys think? Gregory, I see you in the chat. Welcome, my friend. So we are on the corner of 31st Street and 5th Avenue. Check out the facade of this building. Star Fox, we're going to time you out for a minute. Hey, Manthony is here. Good to see you. Hope you're well. Bagels and Walks is here. Dem Met, Anthony is here. Says, hey, Tom, hello from Colorado. Good to see you, Anthony. What do you guys think about this? What a way to start off the stream here. Beautiful view of the Empire State Building on 31st Street. Fantastic looking. JP says, love the vibes. Good to see you, JP. Welcome. Brandon Wong says, we need a streamer like you doing this in San Francisco. I think you do. I think it's Roy, if you check out Roy. Roy's always in the chat too. But I think he is a fellow streamer in San Francisco. Check out this Tesla here. EBITDA says, Tom, just curious your thoughts on Jerome Powell's words from Friday. What do you think the rest of the year will look like when it comes to the public market and the stock market? Well, EBITDA, I think that his speech at Jackson Hole was very, very clear in relation that there's going to be no Fed pivot. So I think there were many PMs, portfolio managers, many economists on Wall Street that were predicting a Fed pivot. And I think he was very clear when he says there's going to be absolutely no pivot. And it's not enough to just have one specific CPI report showing slight deceleration in inflation. There needs to be a lot more data points to prove to the Fed that inflation is truly coming down. And we got some of that economic data today. And based upon the data, there is definitely nothing positive in relation to inflationary pressures from the Bureau of Labor Statistics job openings and labor turnover report. Because what Fed Chair Jerome Powell wants to see is job openings declining, right? What he wants to see is, the ratio of open jobs to people who are looking for a job decline. Maybe more along the lines of a 1-to-1 ratio. But we're seeing the absolute opposite of that. So as the Fed becomes more data dependent, unfortunately for now, it seems like the narrative is shifted or continues to be that good news is bad news, and the bad news could potentially be good news, if that makes sense. Now, what I mean by that is it's a good thing that there's a lot of job openings in the United States. Right, that means usually you could probably say with certainty that if you want to get a job here in the United States, you could probably land one quite easy, and that's good news. But in terms of the market, it's actually bad news, because that means the Federal Reserve is going to continue to keep interest rates, or keep raising interest rates, and they are going to continue to increase the amount of bonds, such as mortgage-backed securities and U.S. Treasuries, that they allow to roll off the balance sheet. An interesting thing that happened, so I believe they released the labor report right around 8 o'clock in the morning. Now, if you were watching the futures market shot up like crazy in relation to the amount of traders betting on at least a 75 basis point rate hike. Okay, so I think when we follow these things, obviously the next FOMC meeting, I believe, is right around September 21st, September 22nd. And many futures traders are banking on the fact that there's going to be at least a 50 basis point rate hike. But now it's looking along the lines of 75 basis point rate hike. I think we could say, so here's what I'll say about the rate hike. I think on Friday, obviously, we are going to get the non-farm payrolls. If we have another scenario like we had last month, with non-farm payrolls coming in over 500,000, when estimates were a little bit below 250,000, we're going to get a 75 basis point rate hike all day, every day. I think we could pretty much take that to the bank. So we'll keep an eye out for that. That's going to be on Friday. Many economists are expecting 270,000 jobs added. But what do you guys remember about this time last month when we did this stream? Many economists were expecting 250,000 jobs added on the non-farm payrolls. But what happened? We came in at a face-ripping 528,000 jobs added. So I don't know. We could have a surprise again. Hopefully not, but again, it's sort of a weird dichotomy as we're talking about this, right? Because it feels bad to say, "Oh, I hope, you know, a lot of people aren't getting jobs." That feels sort of almost dystopian in a way to say that, because we want to see people getting jobs. We want to see people doing well and making more money. But as it relates to the financial markets, when we have really, really good news that the economy is, you know, firing on all cylinders, well, the Fed is probably not going to pivot. So, I don't know. What are your thoughts on that, EBITDA? EBITDA says, Tom, I also thought that Jerome Powell's verbiage and tone from Jackson Hole were way different than they've been talking about in the FOMC. You know, a lot of my friends have been saying the same thing. And a lot of people on the chat have been saying the same. In the chat, have been saying the same thing, and I agree. However, this is what I would say about Fed Chair Jerome Powell. I think it's better late than never, right? You know, I think everybody, and I could, you know, I don't want to speak for anybody else, but I think everybody pretty much knew that inflation was not going to be transitory, right? I think that you could pretty much take that to the bank, even though Fed Chair Jerome Powell earlier in 2021 and, you know, early 2022 was saying, yeah, don't worry about it. Inflation is going to be transitory. Don't even worry about it. Well, I think we all knew that was kind of BS. I think Jerome Powell himself knew that was BS. But here's why I think he did that. And, you know, a lot of people don't like me cutting Jerome Powell some slack. But if you have a Fed chair coming out and saying, hey, inflationary pressures are going to rip, or they're going to go crazy, and inflation is going to be persistent,
they said they didn't even know.
That could actually help inflation go up even more, okay? Because if you have a Fed chair coming out and scaring people and saying, look, inflation is going to be persistent, inflation is going to go crazy, well, now you have people running out to the stores, buying in bulk, causing pandemonium. So I guess I can understand why he did that. Again, maybe I'm just trying to be too lenient on Fed Chair Jerome Powell. But look, better late than never. At least he's taking a more hawkish stance. And I agree with what he said at Jackson Hole. I mean, the speech was only about 8 minutes long, but he was very, very direct in saying, look, as we tighten monetary policy, it's going to be good because inflation is going to come down, but it's not going to come without any consequences, okay? And those consequences include pain to the working class, pain to businesses, because there's going to be a downturn, right? As the cost of money goes up, the amount of money businesses are borrowing is probably going to go down. You know, the housing market is, you know, the transaction volumes are probably going to go down. People can't afford to buy homes, you know, and that's just a byproduct of what we need to do. Again, that's sort of my take on that. So we're headed towards Pennsylvania Station, Penn Station, but I want to show you guys this view. It's one of my favorite views of the Empire here. Strider 1239 says, never again I stocked up on toilet paper. Hilarious. Hilarious. Hey, Kirby is here. It says, hey Tom, do you agree with Warren Buffett's stance on Bitcoin? Is the public uneducated on the risk? So I disagree with Warren Buffett in relation to Bitcoin. I think we disagree there. English is here, says, hello my friend, good evening, welcome England. Good to see you my friend. Bagels and Walks is a great light show tonight. EBITDA says, hey Tom, 97% of people in 2021 were saying inflation was transitory. Very few people were positive on inflation / stagflation, and most flip-flopped before the obvious data came out. Yeah, I mean, maybe just some talking heads on TV, but I mean, if, you know, in my eyes, if you print billions of dollars, I mean, first we had Trump bucks, right? Trump rained down money on everybody, and then we had the Biden bucks. You know, now we have this Inflation Reduction Act where we're going to spend more money canceling these student loans. So I think the inflationary pressures are going to persist. I don't know. Hey, Vinny Castellano is here. Says, hello, my friend. Hope you had a wonderful day. It was a good day. It was a long day though. Let's just say that. Crazy. Hey, Daryl is here. Good to see you. Gerald says, hey Tom, The Empire State Building is a Big 10 tonight. I agree with that. Looks like it's garbage night here in New York City. Look at all this garbage piled up here. Crazy. Connor says, I've seen that show from 30 Hudson Yards. Very nice. Love that. So here's the main two things that I think the Fed is looking for. Okay, and this is sort of the reason why I always try to talk about this on the stream, is because the headline CPI number is what Main Street looks at, right? That's the number you hear about on CNBC and on Bloomberg, and that's good to look at it. I mean, don't get me wrong. But the two main things that I think people should have their eyes peeled on is shelter inflation that makes up about, shelter makes up about 33% of the CPI, right? And that's really what the Fed is looking for. And number two is wage pressures. Okay, so obviously volatile food and energy is excluded in the core inflation print. And Fed Chair Jerome Powell said specifically at Jackson Hole is that they want to look for shelter costs to come down. They want to look for wage gains to come down. And wage gains are not going to come down, everybody, if we continue to have the job openings and labor turnover survey report crazy upside numbers to open jobs. Again, I'll say, we came in at 11.24 million job openings in the United States, and there's only about 5.67 million workers in terms of the overall talent pool. So if you have 2 job openings for every 1 person that's looking for work, well, who do you think has the majority of the bargaining power here? It's still the employee, whether you like it or not. So, you know, we'll dig into that a little bit, but I think those are the two main things that we need to be looking for. And we got housing data as well. So we heard from the S&P Case-Shiller. They came out with their housing index. You know, I think we'll maybe venture over to the Hudson Yards tonight. We haven't been there in a while. But this is right outside of Pennsylvania Station. This is going to be the brand new Penn project. It actually looks kind of neat. This is 2 Penn outside of Madison Square Garden. Hey, Photos from Around New York is here. Good to see you, Photos. Welcome. So back on track here. So we did receive some data. The S&P Case-Shiller shows that home prices weakened in June, but still higher year over year, with an 18% increase from June of 2021. However, a weaker pace than in May, which showed a 19.9% gain. If we look back to April, year over year gain was about 20.6%. So what are we seeing here? We're starting to see slight deceleration. Now, there's a difference between prices going down and prices just not going up as much. And I think that's what we're starting to see. So in May, the year over year number was 20% growth year over year. Then in April, it was 19% year over year. Now, we got a reading of 18% year over year price growth in single family homes. So I think you're going to continue to see that trajectory wind down here. And we've been talking about this for quite a long time on the stream. And one of the main reasons for that is interest rates. So Fed Chair Jerome Powell is going to continue to raise that Fed funds rate. Obviously, on a technical sense, whenever the Fed raises interest rates, it doesn't directly impact that 30-year fixed rate mortgage, but usually that 10-year US Treasury yield moves in lockstep with that 30-year fixed rate mortgage. So as that 10-year US Treasury yield goes up, so will that 30-year fixed rate mortgage. So let's say if you were looking at a $400,000 home, right, this time last year. Well, maybe this time last year you could get, you know, a 3% interest rate. This year it's not going to happen. Okay, you're looking at more of like a 5.25%, 5.5% on a 30-year fixed, which essentially doubles your borrowing costs. So that is going to severely slow down home sales, both existing home sales and new home sales. And we've been seeing this in some earnings reports such as Toll Brothers, Toll Brothers, to be fair, tends to be a little bit more on the high end for new home sales, but as the cost of borrowing goes up, that's going to put a lot of strain on the average home buyer, and I think that's going to result in prices coming down over time. Wow, but everybody, check this shot out. Very seldom do we come over here. This is right in between 34th Street and 33rd Street. I think this is a really nice shot of the Empire State Building here. Hey, Nathy Guadalupe is here. Good to see you. I see my best friend Sunshine After Rain in the chat. Good to see you, Sunshine. Hopefully you had a fantastic day today, already Tuesday. Mike Skate TV says Sbarro. Yeah, it's the best pizza shop in New York right here, Sbarro's. Mount Up 716 says, what's up, Tom? Good to see you, Mount Up. Abdullah, good to see you, Abdullah. Yeah, Kirby's like, Tom, I can't imagine how much college will cost in the coming years with all the inflation. Well, I think the price of college or universities are only going to continue to go up. I mean, I think there's a very, I would say, obvious way that we could work together as a country to bring the costs of education down. And I think that would be to reduce or ban governments from subsidizing student loans. So if we get the government out of the student loan market, I think you'll see prices come down. But we talked about that a couple streams ago. Sally is here, says hello, Tom. Welcome, Sally. Good to see you. Austin City Limits says it's it's going to put a strain on anything you buy. That's true. I agree with you on that, Austin. Oh, check out that car on the back of that thing. So we are across the street from Macy's, Herald Square. Nick is here. Good to see you, Nick. Hey, Gerald says, Tom, I have a question. What's going to happen in Jackson, Mississippi with no water? So, Gerald, we touched on that actually yesterday a little bit. So I'm actually very, very concerned with what's going on across the nation as it relates to droughts. So does anybody remember we sort of had that, fun topic on the streams? I think this was about 2 weeks ago, about the most undervalued real estate markets in the country, perhaps going forward into the next, let's say, 5 to 10 years. And this is what one of the regions across the United States that I said where I think is going to have extreme, well, okay, let me not be too overzealous when I say this. I think property values and land values will perform very, very well in this particular area over the next coming 10 years for this reason specifically of droughts. And that is the Finger Lakes region in upstate New York. Well, I guess you could call it central New York. I know a lot of you send me emails and are like, Tom, Finger Lakes is not in upstate New York, it's in central New York. All right, we'll call it central New York. So again, this isn't a recommendation to buy here, but here's my thesis. Okay, as you see places like California, Nevada, Arizona, and even places where you wouldn't typically see droughts, starting to have droughts and run out of water, I think the number one most valuable commodity is going to be very, very fresh water and fertile land. Okay, so I want you guys to do some research here on the Finger Lakes region in central New York. Now, I believe the Finger Lakes is about 7 lakes, I think. And one of those particular lakes, which is called Skinny Atlas Lake, is I think the second most cleanest lake in the world. Not even in the United States, in the entire world, okay? So if you buy up some land in the Finger Lakes region on either Skinny Atlas Lake, Cayuga Lake, Owasco Lake, I think you're gonna do pretty well over the next coming years. Very, very fertile farmland. and some of the cleanest fresh water in the entire, literally on the face of the earth, is in that Finger Lakes region in upstate New York. So to answer your question, what do I think about all of these droughts? I think it's horrible. And I think we're going to need to come up with some real solutions in order to help people out. I think we're actually going to need to build like cross-country water pipelines, just like we build natural gas lines and crude oil lines. I think we're going to need to start pumping fresh water across the country. Well, what do you guys think? I'll throw it back to you guys. What do you guys make of all this craziness that's going on with the droughts? Sandra Nunez, welcome Sandra. Happy Tuesday to you. Thank you for joining. Everybody, this building that you're looking at right now, it's on the corner of 8th Avenue and 34th Street. It's a very famous hotel and it's called the New Yorker Hotel, okay? But here's the interesting part. I think in 2013, half of this building was actually converted to dormitories for the CUNY system. So CUNY stands for City University in New York. And if anybody here has ever went to a CUNY school, you're probably 90% chance you're from the New York tri-state area, metropolitan area. But as New York is becoming increasingly more popular, there's been a lot of international students coming here to New York City to CUNY schools. And what they've been doing is staying in these dorms. So there's actually dormitories in that building. Vonda Howard says, hey Tom, do the droughts have any responsibility in the crazy surge in grocery prices? Yeah, they definitely do. You know, and that's why the Federal Reserve tends to look at core CPI as opposed to the headline number, right? Because there's going to be droughts, there's going to be, you know, monsoon seasons where, you know, it's going to destroy some crops. They're going to miss a planting season. So that's usually why the Federal Reserve likes to focus on core CPI as opposed to that headline number. Something's going on. So this is 34th Street and 8th. Busy night, busy night. Hey, J22 says, hello Tom and chatters. Neil H. Good to see you, Neil. Says, hey Tom, it's my first time here. Thanks for your time to bring us the great content. Resident of North Georgia. Well, thank you, Neil, for being here. I appreciate that. Northern Georgia is very beautiful. I actually may be in Georgia later this year. Harry Connor says, Lake Mead and Lake Powell are almost dry. Yeah. So Lake Mead is where? Michigan? Where is Lake Mead? Hey, Disney Matt says, hey Tom, good evening, welcome. Lizzie Hatch says, terrible, I've been buying up water. Yeah, I mean, it's definitely a big problem, let's just say that. So now this is 33rd Street and Madison Square Garden. Hey, Villainous here says, how do you hold the camera? We are using a gimbal. So here we are, this is the brand new Moynihan Train Hall. This is actually still a post office. So oftentimes I'll actually take you guys for a little walk through the Moynihan train station. And the very front half of the train station is actually still a working post office, which is kind of cool. But I think the city of New York did a fantastic job on the Moynihan train station. Unfortunately, I don't go in here as much as I probably should. It's still easier just to go on 7th Avenue and head straight uptown. Here, check this out, everybody. This is a beautiful view of the Empire State Building. And you can see the very famous Madison Square Garden, or MSG. Uh, 64 says, Tom, what about the Canadian economy? Well, there's a very old saying on Wall Street that when the United States gets sick, the rest of the world will catch a cold. And essentially what that means is that the US economy is so strong and so powerful that anytime that there's a downturn in the US economy, it has trickle-down effects on the rest of the world, which I guess makes sense if you're talking about import, exports, things like that. Hey, Savi is here. This is a very good evening, Tom, and everybody. Welcome, Savi. Thank you for joining. We are walking towards the Hudson Yards tonight. Wow, everybody, check out how cool the buildings look amongst the clouds. Almost looks like a Batman movie, like Gotham City or something like that. Austin city limits is Tom. It's a chain reaction with all economic issues. I agree. John G says, I think the world doesn't owe me no living. Paul Mendes is here. Good to see you. Natalie says, rain coming your way, Tom. I know, that's a bummer. And I don't have my umbrella today. So I think we're supposed to get a massive rainstorm. I'm not sure what time it's supposed to start. I think it's supposed to start in an hour. So we'll see. But guys, I want to show you this beautiful view of the Empire. This is one of my favorite views of the Empire State Building right here. This is from the entrance of the Moynihan train station. Check that out. What do you guys think? This is probably a 10 out of 10 right here. So we talked about the job openings and labor turnover survey. We talked about how many job openings were added. But let's talk about the quits for a second. So quits came in at about 4.18 million. That was down about month over month, but still higher than the historical average. So ever since COVID, we've been seeing this mass exodus from the workforce, right? They like to call it the, the transformation to the gig economy or the Great Resignation. So just think about that for a second. 4.18 million people quit their jobs. But here's the interesting thing. So I was reading an article in Barron's, and here's an interesting statistic for you guys. It says changing jobs is more lucrative than actually staying in your current job. So for example, if you change jobs and go to a competitor or go to another company, you're probably going to see your wages go up on average about 6.7%. However, if you stay in your current job and you ask for wage gains and things like that at your annual review or your performance review, you maybe get like a 4% raise. And this is actually 100% true, and we talk about this a lot on the streams. I think this is more prevalent, especially if you are in sales, if you have a sales position. So let's say if you're an account executive at a particular company and there's just not enough space for upward mobility in terms of you being promoted to an enterprise account executive. If you have to wait more than a year, what I would do is I would just go apply in the marketplace and apply to a competitor. You're probably going to get a $20,000 to $30,000 base salary pay bump. So I think that's what we're seeing, right? And to tie this all back together, again, Fed Chair Jerome Powell is really talking about those specific wage gains adding to inflationary pressures. So if you see 4 million people quitting their jobs, working somewhere else, and then getting a 6% pay increase, well, that's going to do a whopping number on inflation. And we keep seeing that persist. So obviously, don't fight the Fed, don't fight the Fed, don't fight the Fed. That is what Stanley Druckenmiller, Paul Tudor Jones, and Ray Dalio says. So if they're not fighting the Fed, I don't think we should be fighting the Fed either, even though earnings have come out pretty good. Hey, Andy is here from South Korea. Good to see you, Andy. Always a pleasure to see you. Andy is joining us from South Korea. So Andy, we're headed towards the Hudson Yards neighborhood of New York City. So a little bit of news as it relates to the Hudson Yards. I believe KPMG will be relocating their global headquarters to the Hudson Yards. Has anybody seen that? Maybe we have some consultants at KPMG that are in the chat. But yeah, it is true. KPMG will be relocating to the Hudson Yards.
It seems like a lot of new businesses are picking the Hudson Yards as their new headquarters, and I guess it makes sense, right? As if you want to look for things close to transportation. I mean, you have Penn Station. I believe Penn Station is the busiest train station in all New York City. Peloton office is over there, another company that has been announcing massive layoffs. Hey, War Walker says, looks like it may snow. Well, the wind is definitely picking up here, War Walker. It is crazy windy. And I think it's supposed to rain. I think it may rain.
So that's how you're going to take the trip down here.
Wabi says, I'm thinking that view is an 11 out of 10. Respect it. Joseph, thank you for the comment there. Yeah, if it starts to rain, we may have to pop in and buy an umbrella somehow. I appreciate that, Joseph. Yeah, we'll take a look at the vessel. Hey, Risa says New York City is beautiful. Thank you for joining tonight, Risa. So we had a company, a cybersecurity company, report earnings today after the bell. I was actually on the earnings conference call. I was listening in. If you guys are following me on Twitter at Walks Wall Street, I actually shared the link to the earnings call. So if you guys want to, go to my Twitter page, if you click the link, you could sign up and you could actually listen to the recording of the earnings call. Now, there's obviously a ton of cybersecurity companies out there, but I tend to pick and choose the specific ones that we talk about on the stream. 2 weeks ago, we covered an in-depth review of a company called Palo Alto Networks, which I believe is the unequivocal leader in cybersecurity. They absolutely blew out their quarterly numbers on both the top and the bottom line, and that's exactly what we saw today after the bell with CrowdStrike. So CrowdStrike trades under the ticker symbol CRWD. They beat on both the top and the bottom line. Earnings per share came in above analyst expectations at about 36 cents on revenue of about $535.2 million. Expectations were for 28 cents on $516 million, but that's not the best part. I think it's going to start to downpour, everybody. I'm feeling the downpour right now. So that's not even the best part. The best part is that they actually raised forward guidance. So what do I always tell you guys to look for? It's not just that the company beats on both in the top and the bottom line. The most important thing, I think, is if companies can come out and say, look, we have such a strong quarter, we have so many new deals in the pipeline that we're actually going to take the initiative to raise forward guidance, and that just shows confidence, glaring confidence in the business going forward. So the reason why it's even more important than usual is because think about the economic climate that we're in. Fears of recession, mass layoffs everywhere you see, inflationary pressures. To have a particular company like CrowdStrike to not only meet analyst expectations, but to blow them away and raise forward guidance says a lot about the core fundamentals of their business. So I think it's very important to stay cognizant of that as well. Brain XTC, good to see you. Hey, G at Table says heavy rain showers ahead. Do you have your umbrella ready? Dude, I don't have any umbrella ready at all. Usually I do have my umbrella, but I don't have any umbrella. We may have to duck into the Hudson Yards. So if it starts raining, what we'll do is we'll just dive into the Hudson Yards and we'll see. Maybe they have some umbrellas for sale. Does anybody know how long the rain is gonna last? Does anybody know? Hey, Susanna, says Tom, how much salary in Albany, New York for an investment analyst, 3 years of experience in the job with the CFA certification? Where could I find this information? So there's a good website called Glassdoor. I'm not sure if you've ever heard of it, but if you go on Glassdoor and punch in any particular company that you want to work for, okay, let's say if you want to be an analyst at Morgan Stanley or BlackRock, Fidelity, Bank of America, wherever you want to be a particular analyst at, what I would do is I would go on glassdoor.com, I would punch in where you want to work, and you could actually search by geographic location, and they'll tell you how much, as an average, those particular spots make. So hopefully that helps. But if you have a CFA certification, you could probably negotiate a little bit higher salary. That would be my bet.
That would have been.
So check this out. This hotel, I believe, is the Equinox Hotel. And I believe it's almost $1,000 a night to rent a hotel room in Equinox. Wow, you guys could really tell the storm is about to hit. Crazy. Oh, Natalie says it's only supposed to last about 10 minutes. Quick summer storm. Oh, well, it's definitely coming. Oh, the wind is crazy. All right, let's get inside because it is coming down quite a bit. Yeah, maybe it's going to be one of those things where it's a big rainstorm for like 20 minutes and then it stops. Let's see, hold on. Let me wipe the rain away from the lens. Flat smack. Good to see us. This tornado watch. It looks like there's a big event going on out here. That may get rained out. I love Supreme says, do you think BTC will have a double bottom or lower lows? I would say don't fight the Fed. I think the Federal Reserve has made it very, very clear that they're going to tighten in this environment. And as of now, Bitcoin and cryptocurrencies in general have a very, very high correlation to the NASDAQ. So the NASDAQ is more affected by rising rates than the S&P 500, right? Because in the NASDAQ, you have very, very high beta growth stocks and high beta, high growth tech stocks. And that's exactly how a lot of these cryptocurrencies trade, especially because they don't produce any earnings. So I think you're going to still see Bitcoin under pressure here and stocks in general. Hey, Bernard. It's going to be raining until 1 a.m. You know, not for nothing, we actually kind of do need rain in New York City. Check out the vessel, everybody. Wow, Lil Yell says, Tom, the Hudson Yards subway station is amazing. Is it really? I'm going to have to check it out. Very seldom do I take the subway, but I'm going to have to check it out. Hey, George Ramos says, keep up the good work, Tom. Thank you, my friend. Appreciate it. Here, I'll take you guys to the opening of the Highline building.
What was that? Naked?
Hey, Sam, what's up? So stay safe. Thank you, Sam. Disney Matt says, yes, the Hudson Yards station is very nice. One of the newest in the city and an all-time favorite. Well, that's good news. That's good news. Always like to hear good news. I'll give you guys one more view of the vessel. The vessel's looking great tonight. The vessel's looking awesome. And right behind the vessel is the one and only. I'm not sure if it's called the Equinox Tower, but I know the Equinox, like the gym, has their own dedicated hotel in that specific building. Prod says, am I the only one who thinks the vessel is ugly? It's definitely a controversial building, to say the least. Definitely a controversial building. Some people like it, some people hate it. The rain is coming down here. I'll give you guys one more shot. You know what we'll do, since we haven't done this in a while? We'll actually take a little walk through the Hudson Yards, or the shops at Hudson Yards. We haven't streamed inside the yards in a while. Goshi says, hey Tom, could you recommend some trading platforms for beginners? Well, I think first, you should learn just like the basics of investing. So I'll recommend a couple books that I think you should read. So I think the number one book that, well, let me give you a YouTube channel that I recommend. So you could really understand the core concepts of securities analysis, how to evaluate companies. So Professor Damodaran, Aswad Damodaran, he's a professor at the NYU Stern School of Business. And he is widely regarded as the dean of valuation. And the cool thing is, he actually uploads a lot of his lectures online for free. So if you go over to my Discord, so if you check the links in this video description, under the Market Talk section, I actually included a link to his YouTube channel where he actually uploads his lectures that he gives to business school students at Stern. So if you want to understand how to build discounted cash flow models, how to understand hardcore securities analysis and corporate finance, I would check out and I would study Professor Damodaran. If you want to buy the textbook on your own, it's, I believe, about $7 used off of Amazon. So if you type in Damodaran Securities Analysis under the used book section on Amazon Books, you could probably get it for like $7. And I think that's going to be the first step for you to sort of understand how to evaluate a business, right? Because I think many people make the mistake of, investing in a particular stock, not really understanding that they're buying shares in an actual underlying business, right? They just say, oh, I'm going to watch CNBC or go on Reddit and buy the next hot stock pick. But I would definitely recommend those lectures. But I personally use Charles Schwab and Interactive Brokers. Those are the two broker dealers that I use. Yeah, Mike C says those Damodaran lectures are easy to understand too. He does a great job. He's one of the greatest professors of all time, Professor Damodaran. And he is so generous to actually record those lectures and give them to everybody for free. So those Stern School of Business students are paying, what is it, $70 grand a year? We're getting them for free, so can't beat that. And it's funny, I always like to look at this correlation here. So you'll see a lot of finance YouTube channels with sort of the titles, the 10 hottest stock picks of 2022. And these channels will have millions of views, right? But then you'll go to Professor Damodaran's YouTube channel where he's actually recording his lectures in corporate finance and securities analysis and uploading it to YouTube for free. That's a $30,000 course, and you'll notice there's like 3,000, 4,000 views on that particular YouTube channel. And I think that plays right into market psychology, right? Because everybody out there is just looking for a tip, looking for the next stock pick, right? Nobody actually wants to sit down, pay attention, and understand how to be self-sufficient and learn it themselves, right? So I think if you can take sort of like an arbitrage approach and really just focus, learn the basics, and then over time, if you stick with it, I think you're going to be really successful. So yeah, I think Damodaran is a great resource for corporate finance and learning a little bit more about securities analysis. Also, any of Peter Lynch's books, I think are fantastic. Any of Peter Lynch's books are great. One Up on Wall Street is fantastic. So I'm not sure what this is. It looks like outdoor restaurant. The name is Jibs, J-I-B-S. Big talk says it's raining. Yeah, it's coming down, not too bad. It's definitely coming down, but not too bad. Hey, Keisha M is here. Welcome, Keisha. Wendy England is here. Good to see you, Wendy. Check out these buildings. Amazing. Susanna has, how do you spell Professor Damodaran? Was it with a D? I don't know how to spell it. I can't really rattle it off the top of my head, but I would just sound it out exactly like it's. If you sound it out, punch it into Google, it's going to come up. It's going to be the first thing it comes up, guaranteed. Somebody says I was lucky enough to climb the vessel before it was shut down. If you want to know the link, if you look in the description of this video and click on the Discord channel, I put all of the necessary links in there. Hey, the Mighty Bull is here. Welcome. Good to see you, Mighty Bull. This is watching, listening, and learning. Disney Matt says, Tom, did Joe's open up in Miami? Dude, it did. So Joe's is in Wynwood, but unfortunately, when I was in Miami, I haven't had a chance to go. I never had the time. So we'll go next time. We definitely got to go next time. One thing I wanted to note about the particular cybersecurity company CrowdStrike that reported earnings. If you guys type !CRWD in the chat, so I'll say that one more time, !CRWD in the chat. The Nightbot is actually going to drop a link to the investor deck. So it's going to be the exact deck that they presented on the earnings conference call. So here's one of the reasons why I'm highlighting CrowdStrike. Now, it's not to say that you should go buy the particular stock. That's not what I'm saying. What I'm trying to get, the point I'm trying to get across is you need to sort of understand how to discover emerging industry themes and trends. Okay, and one of the things that we talk about all the time is you want to make sure you're investing in a particular market that has an ever expanding and ever growing TAM, okay, or total addressable market. So if you look at that investor deck, look at the trajectory of the TAM and how it's expanding. Now, for those of you who don't know, CrowdStrike specializes in a very specific type of cybersecurity called endpoint security management. Okay? So I actually sell a lot of this particular software, not CrowdStrike, but some of their other competitors I sell. And endpoint cybersecurity is only going to grow, and it's going to become almost a requirement as I've described once before. So if you think about what an endpoint is, you could think about a mobile phone, so a cell phone. You could think about a desktop computer. You could think about a laptop, right? And as we have a growing amount of endpoints, especially now that we are going to remote work and things like that, every single endpoint that a specific organization has is more points of vulnerability in their corporate network. Okay, so for example, let's say if you're a home health care agency and you have over 3,000 home health aides, and every single one of those home health aides has to clock in and out remotely on their smartphone via some sort of EVV solution or software, electronic visit verification software. If those aides are trying to connect to a private Wi-Fi network, maybe they're going into a Starbucks or something like that, maybe they get a spam phishing text message or an emotet text or email. If they click on that specific link, that link could open up not only that specific employee, but the entire corporate network to a potential massive hack, right? So what you're seeing now is a lot of companies will deploy a specific cybersecurity software on each of their employees' endpoints to try to deter these threats and neutralize them before they even materialize. And they could do that through a plethora of ways, right? It could be anything from artificial intelligence, where the AI will start to get really, really good at predicting the code of the malicious software, right? So I think there's going to become a day where AI, and it's already getting there, making good progress, AI is going to be able to read the fragments of code that are very, very common amongst malicious sort of malwares, right? And they'll be able to neutralize that threat, deter it, and even warn those particular end users not to click on that particular link. So endpoint security software, I believe there's probably going to be a software license on every single machine that we have, especially if it was employer provided over the next 10 years. And in CrowdStrike's earnings, it backs up what I'm saying, because they just came off a record quarter of new customer acquisitions or new logos. And I think as we move into this new environment of a new normal, working remotely, people are going to be doing work on their personal phones. People are going to be doing work on their personal laptops. And those are all endpoints that open up the organization for huge, massive security breaches. Security sector as a whole. And do some research into endpoint security management software. Hey, Dusty Cole, what's up? Dusty, good to see you, man. Always a pleasure. Hey, Nouvelis, or N, I'm just gonna call you N. So Nouveau, could you tell me how to pronounce your name? I'm actually very curious. This is, wow, this was on for a whole hour before I recognized. Yeah, I think we've been having some issues with YouTube and getting the notifications out. N007, NC007. This is get an AI integrated chip now. Bagels and walks is like beautiful reflections. Yeah, I mean, it hasn't rained. Does any of the New Yorkers in the chat, when was the last time it rained in New York? You might remember? Wow, this is a really nice shot. So this is the Empire State Building, but this building is One Penn Plaza. You know, I actually went in an interview, or for an interview in that building. Didn't get the job, but that was many years ago. Michael Anthony's is with Powell in charge by raising rates, going to hurt so many companies and people with the sell-off in the markets. Michael Anthony, I think you're correct. And Friday, when Fed Chair Jerome Powell was actually talking at Jackson Hole, he said that verbatim. He's like, look, the Federal Reserve's policy is not to support the stock market, it's to gain price stability. And right now we don't have price stability. So he's like, the Fed will do everything in its power to get inflation under control back down to that 2% target. So I think interest rates are going to keep going up. You know, we got the job openings report today, and it came in way, way higher than expected. And right as that report came out at about 8 o'clock in the morning, the futures market took off in relation to the amount of traders that are betting that we're going to get at least a 50 basis point rate hike. So now we're almost certain to get a 75 basis point rate hike at the next Fed meeting, or the FOMC, which I believe is going to be September 21st, September 22nd. Hey, Gary Carpenter is here. Says, hey there, Tom. Good to see you, Gary. Welcome. Nouvelle. Copy. Thank you so much. Appreciate that. All right, so we're headed back towards Midtown. There's a nice little walk around the Hudson Yards. The good thing about this is we're going to have an amazing view of the Empire State Building all the way down. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and subscribe to the channel if you are new. Hey, I see Ed Potke here. Good to see you, Ed. Welcome. Ed is joining us from Corning, New York. Good to see you. Ed, it's raining here. Rain's coming down a little bit. Brian says the new newsletter will be coming out tonight or tomorrow, right? Yes. Yes, it should be. So if you guys want to sign up for that free investing newsletter that I write, where I do a deep dive into the equity market, emerging markets, fixed income, I give you my take on the US economy and the like. If you scan the QR code, punch in your email, you will receive that. We're going to talk about the Federal Reserve, we're going to talk about the upcoming FOMC meeting, and we're going to talk about the concept of never fighting the Fed. Wow, this is a really nice shot of the Empire in the rain. Beautiful. Amir Khan says beautiful weather. Good to see you, Amir. Yeah, it's beautiful weather. Wish I had an umbrella. You know, every time we live stream in Florida, Miami, Florida, I always bring the umbrella. What do you guys think about this view right now, the Empire State Building amidst the beautiful Madison Square Garden? I'd give it a 10 out of 10. I think I'd give it a 10 out of 10. A is here. Good to see you, A. So we'll quickly cover a concept called ARR, annually reoccurring revenue, annual reoccurring revenue. So CrowdStrike hit another record, or set another company record, growing their ARR year over year 59% to $2.14 billion. Now, I remember CrowdStrike had a sub-billion-dollar ARR. That just gives you some perspective of how explosive the growth is. And if you're running at over a $2 billion ARR and you're continuing to grow at 59% year over year, that is no easy task. That is near impossible. So big congratulations on a great quarter to CrowdStrike. I'll give you guys one more view of the Moynihan train station in the rain here. Michael Anthony, I'm not sure. I'm not sure when the next OPEC meeting is going to be. You may be right. I think you're right. I'm not too sure. So again, if you type !CRWD in the chat, the Nightbot is going to drop the investor deck for CrowdStrike. Now I want you to scroll down, I believe it's slide number 8. And slide number 8 is when they're talking about the TAM opportunity, or the total addressable market opportunity for CrowdStrike. And here's something interesting, and this is like textbook what we look for on the streams. So 2022 TAM came in at 58.3 billion. Okay, keep that in mind. But it's expected to grow at a 10% CAGR over the next 2 years. So CAGR is an acronym for compounded annualized growth rate. So if we understand that the TAM was about $58 billion in 2022 for endpoint security software, that TAM should balloon to about $71.1 billion in 2024, growing at a perpetual CAGR of about 10%. Okay, right now, overall ARR at CrowdStrike is just over $2 billion. So nowhere near the amount of opportunity in total TAM. So I think CrowdStrike has a pretty decent runway here. Now here's what I will say, sort of talking out of both sides of my mouth here. I think you need to be very cognizant of what we've been talking about in relation to don't fight the Fed. Because CrowdStrike, even though they're profitable, they have very little earnings, and it's another one of these SaaS companies that trade at a pretty steep valuation. So as interest rates go up, so let's just assume interest rates are going to continue to go up, CrowdStrike's future earnings as interest rates increase are going to become increasingly less valuable in today's dollars. However, if we start to see the Fed pivot, which would mean back off of tight monetary policy, or QT, and start to change toward QE, this could be one of those particular companies that have already priced in all these rate hikes. Hey, Lockjaw is here. Good to see you, Lockjaw. Welcome. Hope you're well. E is here. Welcome. Yeah, GX72 is like, Tom, you need that umbrella. Rain is imminent. It's not too bad right now. Surprisingly, it's not too bad. Oh my gosh, guys, look who we have here. We have Andrew Calhoun. This is good day, long time no see, back in New York City. Sorry it's been so long. Congratulations on 740 people watching, almost 19K. Thank you so much. So Andrew is one of our good moderators from Australia. Good to see you, Andrew. Hope you're well, my friend. It's good to see you checking in on the stream. Trust you're well. Hopefully all's well in the land down under there. Disney Matt says, Tom, did you hear about the new urban camping experience at the Brooklyn Navy Yard? No, I haven't. Tell me about it. So I used to go to the Brooklyn Navy Yard quite often, way back in the day. So I would get off the train at Atlantic Terminal, Brooklyn. I would get off the Long Island Railroad there, and I would walk all the way up the street until I hit the Navy Yard. And that was before there was the Wegmans, that was before the Navy Yard was all built up. This was, only 7 years ago, but a lot has changed at the Brooklyn Navy Yard since then. A lot. Hey, Estelle is here. Hey, Tom and chat, good to see you, Estelle. Welcome, thank you for joining. Lori E is here. Ice is here, Lockjaw. So let's continue on our way. We're going to continue to walk down 34th Street here. We're on the corner of 7th Avenue. Rain is still coming down, but not too bad. We're pointing the camera uptown towards Times Square, 42nd Street. Hey, Gene is here. He says, hey Tom, hope you're well. You sound at the top of your game tonight. Gene, good to see you. It's good to be outside, walking around, getting some exercise after work. The LT prod says the rain is going to stop soon in like 10 minutes. So let me know if the camera is good enough to make out the raindrops. Can you guys see the rain coming down amongst the Empire? Estelle is joining us from Australia. Always a pleasure to have you here, Estelle. Now that we're on the topic of cybersecurity, there's another very prominent cybersecurity company that will be reporting earnings after the bell tomorrow. So as we've talked about, CrowdStrike today, they specialize in endpoint security management or endpoint cybersecurity. Okta specializes in identity and access management or IAM cybersecurity. And they are a main competitor of Ping Identity, which was actually taken private by Thoma Bravo. And Thoma Bravo is probably one of the most famous and most notable private equity firms, at least now. They've been in the news a lot for doing a lot of deals. They were founded by Orlando Bravo. And Orlando Bravo is a Puerto Rican billionaire. But Ping Identity also specializes in that IAM space. But I think if I had to bet on one company or the other, it would definitely be Okta. So we'll see if this trend continues. We'll see if the spending of cybersecurity continues to show strength. Cybersecurity spending was very, very strong on Palo Alto Networks quarter, very strong on CrowdStrike's quarter. And if you listen to the CrowdStrike earnings call, there was an analyst from Jefferies that asked a pretty good question. And one of the things that he asked, I think we got some raindrops on the screen here. But one of the questions that the Jefferies analyst asked on the earnings call was, with the economic slowdown, do you see an uptick in churn on the horizon? So churn is essentially customers who are paying their subscription fee, but then they cancel their subscription, right? So we have to understand that CrowdStrike is a SaaS company or software as a service business. And CrowdStrike said, no, we don't see any of that. Actually, our net dollar retention score is 120% above the industry standard. So that speaks volumes. That speaks volumes. So just another thing to be really cognizant of. Andrew Calhoun says, all good here in Australia, Tom, just a bit busier nowadays. Unfortunately, I have to keep stopping and starting the live stream to talk to customers, which makes it very difficult lately. Understood. Well, it's good that business is going well for you. That's a plus. That's a big positive. So now we are on the corner of 34th Street and Broadway. Hey, Lucas is here. Welcome. Good to see you, Lucas. So let's walk up Avenue of the Americas, or 6th Avenue. One of the things you'll notice about New York is anytime it starts to rain, you will never, ever, ever be able to get a cab. And the Uber fares shoot up like 300%. So just be prepared for that. If you come to New York and it starts to rain, God forbid you ever want to get an Uber when it rains, expect to pay a ridiculous amount to go like 15 blocks. Lucas Rojas says, thanks Tom, whenever possible, when you're in Miami we should link up. Absolutely, Lucas. Connor says, I got a cab in New York just as it started raining and people came up to the window asking to share the ride. Yeah, that happens a lot too. Yeah, you'll notice, so look at all these cabs right now. You'll see there's no white light on the top. You know when a cab is open. When there's the white light at the top, there's none now. Ice says New York City is clean by the rain. So a little bit of housing data, everybody. I'm not sure we touched on it, but the S&P Case-Shiller Index came out, and it shows that home prices actually weakened in June. However, it was still a sizable growth year over year with about an 18% housing price increase from June of 2021. But we're starting to see steep deceleration here. So what do I mean by that? So if price gains year over year in June were 18%, if we go back and look at May's price gains, it was about 19%. And if we go back even an additional month to April, the price gains on a year over year basis was 20%. So we're starting to see a little bit of cracks emerge in the housing market where prices are still going up, they're just not going up as fast, okay? But here's the correlation that I like to explain. When we talk about the PMI numbers, right, so the Purchasing Managers Index that are released on the first business day of every single month, even though the PMI numbers are still above 50, what we're seeing is steep deceleration month over month. So if you remember watching these live streams in January, one of the things I said is I'm like, look, the PMIs are rolling over here. We had a PMI of about 68. Now we're all the way down to about 53. And so goes the PMIs, so goes the market. So I think you're going to start to see a similar trajectory here in the housing market where you're going to have year over year price gains start to decelerate. And then in very specific markets, you're going to see price declines. So if we dig down deep into that particular report, we'll see all the obvious markets that were really turbocharged with growth. So of the 20 cities, Tampa, Florida, Miami, Florida, and Dallas, Texas saw the highest year-over-year increases in June. Tampa, Florida, on a year-over-year basis, home prices rose about 35%. Miami, Florida, single-family homes rose about 33%, and Dallas, Texas saw a 28.2% year-over-year increase, which is just ridiculous. I mean, those prices are not sustainable. Now, there was some exclusive data that CNBC was able to get their hands on. Hold on, let me cross the street here. Usually this intersection is no good. That if we look at the month-over-month drop, so as opposed to year-over-year, if we look at month-over-month, home prices actually dropped 0.77%, so just under 1% from June to July. And that's actually the largest one-month drop in 11 years. And according to the research firm Black Knight, San Jose prices declined 10%. San Diego, California, prices declined 5.1%. And San Francisco, California, prices declined about 7.4%. However, Miami, Florida, Tampa, Florida, and other hot markets actually didn't decline at all, which is a little strange because if you remember what I said a couple of streams ago as it relates to the housing market, is that I believe all the particular segments of the housing market, like all of those cities that we just listed, I think those are going to see the largest price slowdowns, right? So usually what happens is when you have a really overheated housing market in specific cities, those tend to be the cities that correct the most. We're starting to see that in California, but we're not yet seeing that in Florida. Now, I'm not saying that's not going to happen at all, but for some reason, Miami, Florida, and Tampa seem to be a little bit resilient. So I'm still going to stick behind my prediction that prices will continue to come down, or will start to come down in Miami, Florida, and Tampa, Florida. I still think prices are going to come down on the horizon. But interesting economic data we got. So I would implore everybody on the stream to, if you go into Google and you just type Case-Shiller Index, if you go to the S&P Global's website, read through the report. I think you're going to be quite surprised with what you see. Hey, Con I Am is here. What's up? Good to see you. Con I Am is like a crash is coming soon. Maybe. All right, so now we are going to walk up to Salesforce Tower. This is 41st Street and 6th Avenue. Christian Wilson says, Tom, Vegas and Arizona are slowing down in the housing market. I think because of uncertainty about the drought. Yeah, I think I agree with you 100%. I mean, places like Vegas, usually during times of economic boom, people move there for the tax advantages. But for some reason, if you look at the overall, I would say, growth of the job market, it's not as robust as the diversity that we have here in New York or even in Miami. Right, and I think that's why we're seeing San Francisco price decline, because San Francisco is really geared towards tech. Now, I know they do have some banking there, but obviously not as much as New York. And I think the way things have been going on over there with the increased prices, the affordability crisis, I think people are trying to move out to more affordable places. So I think you're right. Hey, Gary Carpenter is here. Good to see you, Gary. Welcome to the stream. Brian is here. Says, this is a great street view, Tom. Thank you, Brian. So everybody, we are standing right outside of the very famous Salesforce Tower, which is an enterprise software company that actually just recently reported earnings last week. Now, there was some not so good things about Salesforce's earnings report. Even though they did grow their revenues, EPS missed the mark. And they gave some interesting statements in terms of forward guidance. Okay, so this is what I'll say about Salesforce. And let me know if you guys agree, let me know if you disagree or not. Here's what I think about Salesforce. You guys know that I love Salesforce, Mark Benioff. I think Mark Benioff is a fantastic CEO. However, here's the stipulation. Usually, enterprise software companies go through life cycles. And I think that Salesforce is now a mature enterprise software company. So I think you're going to start to see valuations normalize here. And Salesforce isn't going to trade as a super hyper growth stock that's going to trade at, ridiculous multiples of price to earnings and price to sales, because the vast majority, well, I'm going to tread lightly when I say this, but it doesn't have a revenue runway like a company like Palo Alto Networks or CrowdStrike would have, that are a little bit smaller companies. I believe Salesforce on a quarterly earnings basis is in the multi billions. And something like a CrowdStrike has revenues of about 2.1 billion in ARR, annually reoccurring revenues. So, Usually when you see these larger enterprise software companies mature or go into their growth stage, I'm not to say that, you know, their stock price is totally tapped out, but where I like to find particular software companies are right in the mid-market. So I want to try to identify either mid-market SaaS or software companies that I can buy that have a good growth trajectory to mature into a very mature enterprise software company, like a Salesforce. So imagine if you could take a CrowdStrike from $2 billion in ARR and ride it all the way up to, I don't know, 20 billion in ARR. I'm not saying that's gonna happen, but I think you guys sort of understand my logic here. So I think if you're looking to buy Salesforce as a growth play, I think there's a lot better opportunities out there. So, and we've noticed this from Salesforce because a lot of their growth now comes from acquisitions. So as a company matures, they'll usually just buy other companies to grow their revenues. Like for example, Salesforce bought Slack. They used to be a publicly traded company under the ticker symbol WORK, and now Salesforce made that acquisition. So just something to be cognizant of. Hey, George says, wow, Tom, thank you for your insights. Thank you for being here, George. I appreciate it. Austin City Limits, like, wow, raining pretty good there, Tom. Yeah, it actually feels kind of nice. It was quite humid today. Hey, Roy S is here. Good to see you, Roy. Welcome. Yeah, line sync is like one day we're going to go on Google Street View and we're going to see Tom on Google Maps. It's possible. But if you guys are enjoying the stream tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams roughly 5 days a week between the one and only New York City and Miami. This is the Marsh McLennan building here. Got some more raindrops on the lens here. Roy S is like, I've just noticed Tom has changed his pick on Twitter. We did. So if you want to check us out on Twitter, we are at Walks Wall Street. Sometimes I post my thoughts about the market throughout the day if you want to check us out over there. One of my favorite things about the rain in the city is the reflection of the water and the lights. So check out all the way down there the Radio City Music Hall sign. Beautiful. Dr. Longest, thank you. Says, appreciate you not letting the rain stop the stream. I kind of like the rain streams. They're a little bit more relaxing than usual. Estelle says, looks great. Good to see you, Estelle. So everybody, on Friday is going to be a very, very big day. The stream may go a little bit over time on Friday because Friday we are going to get the non-farm payrolls. So the non-farm payroll numbers are going to come out. And I think this is going to be the number one piece of economic data that the Fed is really going to look towards. Because if we think about what happened last month, economists all across Wall Street said, yeah, you know, we're probably going to have about 250,000 jobs added, 250,000 payrolls. We got about 528,000. Okay. So this time, economists are expecting about 270,000 payrolls to come out. And I don't know. Something tells me that we're going to receive another hot number. And the reason why I say that is to sort of piggyback off of the data that we got today from the job openings. So for every American looking for work, there's about 5.2 million Americans that are looking for work right now. There's about 2 jobs available for every American. Something to be cognizant of. So here we are at 1211 Avenue of the Americas. This is the corporate office of News Corporation. This is where they shoot Fox News, Wall Street Journal, Investors Business Daily is in here, as well as Barron's. You could actually see into the news studio. It looks kind of cool. The Ingram Angle. I'm not sure I ever heard of that. Oh, is that Laura Ingram? Can anybody confirm that? I don't really watch the news. I only read like Wall Street Journal, Barron's, but Ingram Angle. Yeah, so Wayne McCase is with the USA. 12 million job openings. Friday's non-farm payrolls will come in hot. Yeah, I mean, I think you're right. And look, this is the thing. This is why it's so crazy. Markets are so crazy, is because the good news is now bad news. So we want to see people getting jobs, right? I think everybody, whether you're a Republican or Democrat, I mean, unless you're a sociopath, you know, if you see a non-farm payroll numbers coming in at, you know, over 500,000, while many economists or the experts were expecting 200,000, you're like, wow, you know, my fellow Americans are doing great. Economy's cranking, we're adding jobs, it's fantastic. I think everybody would agree with that. However, from an investment standpoint, as we're talking about our retirement accounts, we're talking about the stock market, that's actually bad news, because the Federal Reserve, as they said on Friday at Jackson Hole, they're like, look, we need inflation to come down, and inflation is not going to come down unless the labor force or unless non-farm payrolls come down. Okay, we went over this a bunch of times. If you have a smaller and smaller labor force, but you keep adding and adding jobs, well, the employees now have more of the bargaining power, right? So if employers have only 5 million people to choose from, but there's 12 million jobs available, well, if you don't give me the salary that I want, that's fine. I'll just walk across the street and go to the next employer and they'll give me what I want, right? So it starts this bidding war, and it starts this wage price spiral where wages continue to go up, and companies try to offset those wage pressures by increasing prices to the average consumer, which would be you or me. So I think it's a good point. It's going to be all eyes are going to be on the non-farm payrolls. I can tell you this with 100% certainty. Well, maybe I shouldn't say 100%. However, this is what I'll say. If we have non-farm payrolls come in well above expectations on Friday, the Federal Reserve is going to raise interest rates 75 basis points. I think that's like a given. And I actually think that would be the right thing to do, because price stability is the ultimate goal, not to be, you know, a cheerleader for the stock market. Price stability is the ultimate goal. Nicholas Dura says, hey Tom, what's your opinion on Brian Stiller being fired from CNN? I didn't even know that happened. To be honest, I didn't even know that happened. I don't watch CNN. I don't really watch mainstream news because I don't pay for cable. I don't watch TV. Charles in action, good to see you. All right, team, we are coming up on Times Square. We haven't been to Times Square in a while. Yeah, I'm seeing a lot of fake news stuff, but to be honest, it's not because of the fake news. It's just because nobody watches cable television anymore. And there's been many reports. I think Gartner just came out with a study that found that 90% or over 90% of Generation Z does not pay for a cable TV subscription. They only pay for like a Netflix, so they pay for those streaming services so they can pick and choose the type of shows they want to watch. And many people actually get their news from YouTube, myself included. I mean, I'll read the Wall Street Journal, Barron's and stuff like that, but I'm not going to pay for Fox News. I'm not going to pay for CNN. That's crazy. That's ridiculous. I don't even have a TV. So here we are at Morgan Stanley. This is a very notable investment bank. And Goldman Sachs actually just released a survey, some data of the most heavily shorted names in the stock market. Morgan Stanley was one of those names. I guess we'll do a little bit of trivia tonight. Does anybody know right now in the stock market what the most heavily shorted company is? If anybody could guess this, if you come to New York and we meet up, I'll buy you like a steak dinner or something. Dan Zhang says, Tom, do you know the channel Breaking Points? They are the best independent news channel on YouTube. I don't know them, but I'm definitely going to check them out. Breaking Points. I'm going to check it out. I'm 100% going to check that out. Ooh, 3T3 says Tesla. No, it's not actually. War Walker's like, I want lobster, not steak. I'm seeing a lot of Tesla. It's not Tesla. I'll give you guys a minute to answer. Nope. Gary says Apple. It's not Apple. Amazon, no. All right, I'll give you 2 more guesses. I'll read 2 more guesses, then I'll give it to you guys. No, it's actually NVIDIA. Somebody says General Electric. It should be General Electric. But it's actually NVIDIA. It's actually NVIDIA. So one of the most heavily shorted companies on Wall Street right now is NVIDIA. And that may be because of people use NVIDIA to short NVIDIA as like a beta hedge to their portfolio. So maybe the directional bias isn't necessarily just we're going to naked short NVIDIA because we hate the company. You can sort of use that as a proxy to hedge your overall portfolio with. So maybe that's one of the reasons too. Who knows? All right, so we made it. Times Square is dead tonight, probably because it's raining. But if you stand right here, you could actually see where they dropped the ball on New Year's Eve. And if you look all the way in the distance right here, that's actually the top of the Empire State Building. Yes, NVIDIA, NVDA. NVDA. Nick says Bed Bath & Beyond. So this is the most heavily shorted companies by hedge funds on the street. I thought it was kind of interesting myself, but I mean, at the end of the day, maybe they're just using it as a hedge. Hey, Gary Scott says, hello, Tom. I'm traveling from Sydney, Australia to New York City next week. Hate the currency conversion, 0.68 cents to the US dollar. Dude, well, first and foremost, Gary, welcome to the US, my friend. We're happy to have you, and I hope you have a fantastic time. Number 2, you're exactly right. The US dollar, or the Dixie, is at some of the strongest levels that it's ever been in 20 years. And this has been wreaking havoc on a lot of emerging market countries. And even Barron's came out with a really good article over the weekend that stated that a lot of emerging market countries are running low on their currency reserves. So a lot of the times, a lot of the weaker nations out there will have reserves of US dollars, will have reserves of Japanese yen. And they're running extremely, extremely low on that right now. And if we've noticed an interesting theme about this earnings season, it was that almost every company that reported earnings cited that currency fluctuations affected their top and their bottom line. Okay, we saw this from ServiceNow, CEO Bill McDermott. We saw this from Apple. We pretty much saw this from every major company that does business abroad. Because, I mean, if you think about it, if you're selling your product or service in another country, and then you go to exchange those profits back to US dollars, well, you're going to be able to buy a lot less US dollars than you would have because the Dixie is screaming to 20-year highs. So I definitely feel your pain on that. But I think you're still going to have an awesome trip. Somebody says Warren Buffett recommends S&P 500 and chill for 95% of people. I agree with Warren Buffett on that. So essentially what that means is the majority of investors Warren Buffett recommends is to just dollar cost average into the S&P 500, which means just buy the broader stock market. And I agree with that. That's actually what I do. So in my IRA, in my retirement accounts, like clockwork, actually today it hit. So the last Tuesday of every single month, there's a portion of my income that just goes into my retirement account that buys the market. So that actually happened today. This is one of the last Tuesdays of the month. And I actually agree with that. However, I do also agree with active investment. Because active investors on Wall Street are extremely, extremely important to guide companies to have integrity and to maybe even increase the overall operations of the business, right? So if you think about somebody like Carl Icahn, or if you think about somebody like Bill Ackman, those are the category of investors called activist investors. So maybe they'll buy a huge stake in a particular company and they'll get voting rights, or they'll get board seats where they could dedicate, companies maybe fire a particular person or hire particular people, trim the fat at organizations and increase operational efficiencies. I do think that active investment is very, very important. But yeah, my particular retirement account is all indexed in the S&P 500. And in my taxable brokerage, I run a long-short portfolio in Interactive Brokers in Charles Schwab. But yeah, I think that's, I agree. I agree with Warren Buffett on that 100%. Hey, Cynthia Martinez, what's up? Good to see you. So I'm not sure if I already brought this up, but did anybody hear the news that Snapchat is allegedly about to lay off 20% of their workforce? That would equate to over 1,000 employees. Now, I don't want to come out and say this is a fact because I was hearing a lot of rumors on Twitter, but I actually kind of tend to believe it because Snapchat bombed their earnings last quarter, and I think they're going to be looking for any and each way to trim the fat in their organization. So, has anybody on the stream heard of that rumor today? Yeah, Rare Bear's like, people still use Snapchat? Yeah, I believe it. Well, I mean, think about it like this. As you head into a recession, hey, Troy 1995 is here. What's up, Troy? Welcome, my friend. As we head into a recession, or people are fearing of a recession, What is the number one place where people cut back on? It's advertising spending. And Snapchat's whole business model is ad spending, the entire business model. So, hey, Walking Minnesota, what's up? Says, yes, I saw a Walter Bloomberg tweet about it. So that's where I actually got it. But then again, a lot of those things could be not confirmed, and especially on a sensitive subject like, 1,000 people losing their jobs. I never want to parade about it and say, yeah, 20% of the workforce is going to be gone. I mean, I hope not, fingers crossed, but I think it's starting to look like that's going to be the case, unfortunately. But here's the thing, everybody. As we've been talking about, we covered this earlier on the stream, there was a good Wall Street Journal article that came out roughly this time last week. And here's what the article stated. They said even though that tech companies specifically are laying off a lot of people, what they're finding is that the labor market is still white high. That the people who are getting laid off are fortunately able to find another job relatively soon. So I think, God forbid, if you were laid off or you were affected by this particular layoff at Snapchat, I think you're going to have pretty good opportunities to re-enter the job market in a potentially more lucrative position, by the way. So the Wall Street Journal article interviewed this particular gentleman that lost his job at an insurance company, salary raise from what he was actually making before. So I think this labor market has room to absorb a lot of people. Hey, Cosmo is here. What's up? This is Jollibee. I've never been here, Cosmo. Is it good? I've never been here. I know this was like a big thing. It opened and everybody wanted to check it out, but here, let me wipe the screen. I think we may be buffering a little bit. Here, I'll stand over here so you guys can see it. But this is Jollibee. Dan Tate getting banned on all platforms. No thoughts on that, Dan, to be honest. I saw a couple of his videos because it comes up in my feed. I just don't have any respect for that guy. So no comments, and I'm really not in the, just no comments. Yeah, I think there's some buffering here. Matthew, but I think we're starting to buffer. All right, I think we are out of the buffer zone. Hey, Josie is here, good to see you. Yeah, I think when it rains, starts to rain a lot, we start to buffer quite a bit. Hey, Dan says, hey Tom, do you know the site called Course Career? It trains people with or without college degrees on how to get a job in tech sales. I don't. But Dan, if you could email that to me or put that in the Discord, I would like to reach out to them actually, because that's exactly what I would like to do. I think that's actually a really good idea. Estelle, this is all good now. Copy that, Estelle. Bagels and Walks. This is another plug for Teal looking for jobs. It's like a CRM for job search. I'm gonna have to write all of this stuff down and check it out. Maybe I'll actually reach out to these companies. Michael Anthony, good to see you, my friend. Welcome. Trust you're well. David Randall says, I'm familiar with Course Care. Love that. Yeah, I'll have to check it out as well. I'm not familiar, but I'm definitely intrigued about it. Or intrigued by it, let's just say. All right, so everybody, we're gonna head back downtown. I gotta head all the way back to the Moynihan train station where we will conclude the stream. Hey, Chris is here. Hey Tom, how long are you in New York City for? I am not sure, to be honest. To be quite frank, I'm not too sure this time, but maybe a week or two. Wow, check that out, everybody. You could see all the sort of steam or the clouds right above the Empire. Looks incredible, insane. Hey J22 says, Tom, thank you for another great stream. Have a wonderful rest of the night. And good job on all the moderators. Thank you so much. Appreciate it, my friend. GX72 says, Tom, did you get your Florida license? I did. I did. So speaking of that, here's what I think is going to happen. I think a lot of people are going to be in for some crazy sticker shock on the property taxes. So in those specific markets that went gangbusters, like the Dallas market, you know, even Denver, Colorado, even parts of Florida, like Tampa, Florida, Miami, the property values are all going to get reassessed like 72% higher. And these tax bills of people who had just bought new homes, my God, they're going to double. So if your tax bill was $4,500, it's going to be almost 10 grand. It's going to be like $9,000. So I think people need to be cognizant of that. What do you guys think about that? Or has anybody in the chat, has your appraisal values gone up? All right, check out the One Vanderbilt here. Hey, Martin Perez says, greetings from Argentina. Welcome. Good to see all of our Argentinian viewers. Trust you're well. Man, that looks amazing, the Empire here. Yeah, David says, yep, in Dallas. So here's the thing. Even Texas doesn't have a state income tax, right? So Texas doesn't have a state income tax, but where they get you is on the property taxes. And I don't think a lot of people realize that. Some of the highest property taxes in the United States are in Texas. I know suburbs of Dallas have extremely ridiculous property taxes. Now, even though the state of Florida does not have a state income tax, the property taxes are actually quite high. Okay, now I know it depends on where you are in the state of Florida, but in general throughout the state, the property taxes are quite high. Wow, Wendy England says my appraisal value went up to 800K. That's insane. Yeah, I think people need to be cognizant of that. I think this is a 10 out of 10 shot of the Empire right here. Ice's beautiful skyline. Wendy England says Vancouver. Bruce's property taxes doubled here in Florida, West Coast. Yeah, I mean, I think a lot of people who bought homes last year did not take into account just the astronomical levels that property taxes are going to rise. Now, here's what I will say also. So I was talking to a relatively large landlord on the small business side, okay? So as we're talking about SMB, so small to medium-sized businesses, I was actually talking to a relatively large single family and like multifamily, but in the duplex, triplex space in the Aventura area and North Miami Beach area of Florida. He says, we're seeing rents come down a little bit. He's like, but last week, well, this was 2 weeks ago, I talked to him, but he's like, once the appraisals go out for the property taxes, all of these rents are even going to go even higher. And I think he's right. I mean, if you think about it, as property taxes go up, the landlords, you think the landlords are just going to pay the property taxes without passing on that cost to the tenant? No shot. This is the NASDAQ, by the way. This is the office in the NASDAQ here. So I think you're going to start to see rental pressures potentially even start to increase next month. Because let's say if you owned a single family home and you were renting it out, right? You use it as a rental, but your property taxes went up $3,000 that year. Well, the rents are probably going to go up $200 or $300 a month to cover that cost. So I think this is another sort of black mark on inflation, and it could continue to persist for quite some time. Hey, Martin Perez says 80% annual inflation rate here in Argentina. You're doing good. Yeah, that's the thing. I mean, I feel really, really bad for our friends in Argentina. I mean, that's ridiculous. It's almost criminal. 80% inflation. I don't understand how people do it. I mean, wages must have to go up almost every single month just to keep pace with inflation. I mean, that's insane. So this is 42nd Street and Broadway. If you guys are enjoying the live stream so far tonight, please feel free to leave a like on the video and subscribe to the channel if you are new. Hey, Kathy Lyons is here tonight. Good to see you, Kathy. Welcome, always a pleasure seeing you. We're gonna head down Broadway tonight. Yeah, Dusty Cole's like, but so how do people live or function in an economy where it's 80% inflation? Well, I think just prices must change all the time, and employers must just have to raise wages constantly to keep up with inflation. I mean, Paul Meddy says buy land, pour your own slab. Well, here's the problem. Here's where I think it's getting a little bit out of control, especially at places like Long Island, New York. You know, a lot of these houses now that go for, let's say, $650,000 to $800,000 on Long Island, that's going to come with at least a maybe like an $18,000 to $20,000 property tax bill a year. If you think about what that means, you know, so take, you know, 20,000 times 40, you've just eroded all your equity away. I mean, that's not an investment. That's like ridiculous. So why would anybody buy a house on Long Island if they're using it just to live in? Because the idea behind buying a single family home, if you're just going to live in it yourself, is so you can build equity and it's a forced savings account, right? But as property taxes go up ridiculous, why would anybody in their right mind buy a single family home on Long Island if they're not making any rental income? Because in 30 years, all of your equity is going to be totally eroded away by the property taxes. If anything, you're going to be in the hole a ridiculous amount. In that case, I would just rent, right? There would be no point in buying something if you're not going to make cash flows from the tenants there. I don't understand how these people do it. I mean, some of my friends just recently bought homes on Long Island, and they're like, yeah, I'm grieving my property taxes because the bill is almost $19,800. I'm like, I don't know how I would do that. I mean, even if you're making $500,000 a year, how do you do that? How do you dish out 20 grand a year in property taxes on a 4-bedroom, 2-bathroom house? Things are nuts. Things are crazy. Yeah, Dan Zang says I will be moving to Forest Hills, Queens from Long Island City. It's bye-bye Manhattan View for me. Ooh, that sucks. Yeah, I mean, Dan, you're seeing it. You've told us multiple times on the stream so far that, things have gotten really nuts. Things have gotten really crazy. I mean, rents are going up. It's pushing people out. Yeah, Michael Anthony, I agree. Yeah, Yogi, it's like buying a house and paying rent to the government. Yeah, it's like you're leasing the land pretty much. Hey, Nicole, what's up? Good to see you. Clarence Jackson says my rental property taxes went up 25% in Connecticut in the last 2 years. Oh my God. So Clarence, since you're a landlord, right? What do you do in that situation, right? You obviously pass those tax increases on to the tenants, right? Because if not, you would have to sell the property. So sort of how are you navigating that situation for maybe some of us in the chat who are watching that maybe own, 2 or 3 doors or something like that? And my thesis is that even though we've seen rents cool off a little bit, now that we just recently got all of this appraisal value, my property taxes, had I not filed for the homestead on time, would have went up $4,000 a year. So what do you do in that situation? You have to pass those costs on to the tenants, or else you're underwater on the deal. Hey, Rhonda, this is first time viewer. I'm in Cincinnati, Ohio, and rent was up. People cannot afford it. I think it's the 3rd highest increase / inflation in the country right now. Wow, Rhonda. Well, first and foremost, Rhonda, thank you for being here. We appreciate it. And thank you for sharing that experience. Yeah, to your point, inflationary pressures are crazy. And I think rents may have one more push higher now that everybody's property taxes have gone up. Yeah, Clarence Jackson says I had to increase rent. There you go. So if you want to rent, let's just talk about, Miami, Florida for a minute, because we got some housing data out. And year over year, single-family home prices in Miami went up 18%. However, we are starting to see deceleration here. Okay, so in May, they went up about 19%, and in April, they went up about 20%. So we're starting to see deceleration, which is good. But if you want to rent a 3-bedroom, 2-bathroom, single-family home just south of Aventura, Florida, it's probably going to cost you anywhere from $3,500 to $3,900 a month. Think about how crazy that is. And this particular landlord that I was talking to, he's like, yeah, I'm gonna have to hold my rents right around there, just under $4,000, because the property tax bill is skyrocketed with all these people moving here. So this could potentially be a spiral for at least a year or two longer. You have Veronica G. Syed property taxes in the rent. Pitt to New York City. Says, I have a handful of rentals back in Western Pennsylvania and Pittsburgh. No clue how people can be landlords in states like New York, New Jersey, or Connecticut. Yeah, it's definitely tough. I mean, it's definitely really, really tough. Hey, Mimi, says, Tom, I bought my home 20 years ago. Excellent neighborhood. Property taxes are $695 a year. I'm pretty lucky. Oh my God. So Mimi, what state is that in, if you don't mind it? I mean, you don't have to answer that, obviously, if you don't want to, but I would be very intrigued to know what state you're in, to have the property taxes be that low. That's fantastic. Now, I know that's South Carolina. For anybody who's a viewer in South Carolina, I know those property taxes are relatively low. Now, there are some nuances here. I think if you have a single family residence or your primary residence in the state of Florida, you're over the age of 65, I do not think you have to pay property taxes, which is good. I actually think that should be a nationwide thing. Does anybody agree with that? I think that should be a nationwide mandate that if you're over the age of 65 on your primary residence, you shouldn't have to pay property taxes. I mean, you worked hard all your life to pay off the house. You deserve to retire with some sort of decency and dignity. I don't know, maybe it's a hot take, but check out how beautiful the Empire State Building looks like. Wow, Mimi's is in Iowa. Dude, I may have to check that out. Hey, Yes Forever 18 says, I bought a new home in Sheepshead Bay, property taxes a few thousand, lesser than 6K, and it's not in a flood zone. Wow, that's actually pretty good, man. That's actually not bad. Yeah, somebody says property taxes. How many types of taxes are we gonna have in the United States? More taxes. That's why I tend to laugh when people say we should initiate a wealth tax in the United States. Have you ever heard of property taxes? That's a wealth tax in and of itself. Hey, Bernard Conte says, Tom, I'm moving to Wisconsin next week, where I bought a place 16 years, moving out of Connecticut next week with my career high taxes here. Wow, man. Well, congratulations on your new place. Hopefully you're gonna have a fantastic time. Wow, Susanna Herbert says, Tom, I have $800 a year property taxes in Maine, close to the border in Canada, rural area. Love that. But everybody, we are over time. I do have to go. So I want to thank everybody for coming out to the live stream tonight. I had a great time. Hopefully everybody has a fantastic middle of the week. It's already Wednesday, so finish the week strong. We will be live tomorrow at 8:30 Eastern time. So please join us tomorrow for another live stream where we'll be talking about Okta's earnings report and doing a deeper dive into the upcoming jobs report. So if you want to stay connected with us, if you scan the QR code on your screen and punch in your email address, it will take you to a landing page where I write a free newsletter where we cover the US equity markets, emerging markets, fixed income, housing, all of that good stuff. So please join us over there. And we will see you right back here tomorrow from New York City at 8:30. So Line Sync, thank you so much. Austin City Limits, all of our moderators, FredX, Dusty Cole, Natalie, all of our new viewers. Thank you so much for joining, everybody who's new here. Nicole B. Winning, thank you. Denise, New York City. Sunshine After Rain, Rex A, thank you so much. Manthony Muhammad, and we'll see you guys all tomorrow. The Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere, and you guys just need to know where to look. Like, subscribe if you're new, and we'll see you tomorrow, 8:30. Take it easy, everybody. Have a great Wednesday.